Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, happy to be back.
Alexandria Minerals has a special meeting on July 24th, which will decide the fate of the company, as well as that of founder Eric Owens. Who are the potential winners and losers of the outcome?
This, Jim, unfortunately, is going to be a Pyrrhic victory, and the minority shareholders are going to suffer regardless of the outcome. But if there's any blame to be placed, it should be placed on the thug culture on Bay Street. Now, Alexandria, we first talked about it in June of 2017 when we introduced its Cadillac brake project and Eric Owens, the founder's strategy of trying to rethink the orientation of some veins, similar to that on the Triangle project of Integra Gold to the north, which Eldorado had bought out. And earlier, late 2016, they got the support from Sprott Private Wealth Management to raise $5-6 million, and that got raised in December 2016, closed January. And then there was another financing in which Eric Sprott himself took down a big chunk, which now makes him the largest shareholder. And everything seemed to be going great, but something started to go wrong during the summer. Alexandria Minerals was exhibiting at the Sprott Vancouver conference, which happens every year, and next week it is happening again, and I will be there doing a workshop on elephant stalking in the Pilbara, Nevada, and other places. And when I talked to Eric Owens, then everything seemed to be on track. They had this drill program going to test this new theory, which actually involved drilling some holes down dip the structure in order to properly understand the high-grade flat-lying veins. And there was no sense that anything was really going wrong. But in fact, there was something going wrong. I do not really know the backstory, but the investment banker at Sprott Private Wealth somehow became unhappy with this situation, and he had brought help or encouraged Alexandria to bring on board Peter Gundy, and there were some other people that were sympathetic to Peter Gundy. Now, Peter Gundy has an illustrious career. He's basically retired now, but he is an expert in corporate governance. He doesn't own very many shares in this company. He was really basically brought on board as the sort of the bird dog on the company board for the financial backers of the company. He now, as chairman, has emerged as the lead in a battle to get rid of Eric Owens, who founded the company more than 10 years ago. And what caused this is something that the board, the current board, has never really explained to the public. And that was in the back rooms, they came up with this idea that, we really don't want to keep funding this company. We're in a bear market for these projects. None of them are really working out in that sort of Abitibi greenstone belt into which we poured hundreds of millions of dollars to various companies like Cisco Mining, Probe Metals, Bonterra, a whole list of companies, some of which we featured on Discovery Watch. We would like to fold this company into another one which has some synergies by having properties in that area. And originally, Eric Owens was on board with this, and they had their private negotiations, but it became apparent that this was not really going to happen on favorable terms for Alexandria Minerals, which with its 400 million shares is pretty much stuck in the 5 to 10 cent range, like many of these companies where the management does not own a huge number of shares and a lot of papers in the hands of these Bay Street institutional investors who are always sort of wondering, okay, where's the upside coming from, and what is my exit for this position? And so sometime in October or so, Eric Owens realized that the company was basically being served up on a platter to another much better financed company with a much bigger market cap, and that they just wanted to get rid of their positions by folding it into a bigger, stronger company, where possibly even the vested interests had a bigger stake than than they did in Alexandria Minerals. And one reason that I'm not particularly happy about how this all played out is it's because the minority shareholders seem to be a secondary consideration in all of this. Anyways, they created this special committee to discuss all this merger stuff and how to keep financing it. But Eric Owens apparently, and this is what's all probably going to come out in a court case, which has been filed a lawsuit. The Founders Group has filed a lawsuit, which will be handled by Joe Groya, who is famous as the lawyer who demonstrated that the Ontario Securities Commission was wrong in accusing John Felderhoff of any complicity in the Bre-X fraud from 1994 to 97. And he's the one handling this case. So we'll get a lot more details in the next couple of weeks. But on July 24th, there will be this meeting where the fate of the company will be decided. Now, in our last Discovery Watch comment on June 11th, we talked about a resource estimate that Alexandria had published. This resource estimate appears to have been done without the benefit of all of the holes that were drilled last year as part of this campaign, this $9.2 million that the management circular asserts resulted in a failed drilling program for Alexandria. And so the stock was hanging in there in the 6 to 10 cents range, collapsed when this resource estimate came out with all this clucking by Peter Gundy and his team about how these results are not very good and that they're going to refocus the company and the upside was pitiful. In essence, they were downselling the value of Alexandria, and the market got the message. And then, a short time later, Eric Sprott comes out and says, "Oh, my 34 million shares and that of another entity that's sympathetic to me, we're actually in favor of the Peter Gundy's board," which consists of all these financial analyst types, one geologist. In their circular, they say, well, we're going to hire competent people to run this company, which is not going to happen. They also say we're going to figure out a non-dilutive way of financing the company. Well, this company is not a cash flow producing company. It is an exploration development company. You always dilute, whether you farm out the project or if you issue shares to finance further work, you dilute the company. Dilution is a fact of life with a junior exploration company. So in their circular, they're in essence making a fantasy promise that they cannot keep except by deep sixing the company, serving it up to be acquired by somebody else. And the Founders Group, the dissident circular, by Eric Owens' group, they want to go in there and raise more money. They had some financing teed up. It involved one of those charity structures that are so popular in Canada, where it seems the greatest interest is in avoiding taxes rather than making money on a true speculative bet on a risky outcome. Personally, I'm in favor of the company giving it a shot. However, the treasury is pretty much empty. The legal costs are going to empty it further. If the current board wins, well, then they'll have wasted a lot of money. And if the Eric Owens group gets back in, well, then they'll probably have their costs reimbursed also. So we now are enriching the lawyers on Bay Street, who, of course, are very happy for this business. There's going to be more ugliness coming out into the open. So it's going to be a Pyrrhic victory, because no matter who wins, the stock's going to be a 2 to 4 cent stock, and it's going to be served up for acquisition by some other company. Probe Metals continues to be the most obvious candidate, since they're trying to develop operations or deposit, mineable deposit in the Val-d'Or East property. So Pyrrhic victory. Again, thug culture on Bay Street. Eric Sprott not exactly doing himself any favors in coming out in favor of this. Sprott Private Wealth Management is actually part of the Sprott Global Complex with Peter Grosskopf and Rick Rule. So as far as I know, Eric Sprott is doing his own things these days, and maybe he just got to be the bag holder with Alexandria while everybody else kind of fled and dumped their stock. Who knows? But he's the only one with any real visible shareholdings to make a difference. The current board owns all of 1.4 million shares, and it's a sad comment, similar to the Colorado story, which they're going to spend the rest of the money in the Golden Triangle property area. Goldcorp's the largest shareholder. Nobody's going to care about that company. They need some unexpected winter hold that changes everything to put that back into play. These Bay Street type of forays into running the company and wresting control from the founders is an unfortunate outcome, but ultimately it is the price you pay for these large brute force make it so financing that have been the rage in the Canadian sector in the past couple of years.
We'll have more with John Kaiser right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome back. We're chatting with John Kaiser. John, a couple of weeks ago, another junior called Metanor Resources, in which Eric Sprott, as a large shareholder, agreed to merge with Bonterra Resources. Is this a good deal for either company?
I think it will end up being a good deal for Bonterra Resources, which has become one of Eric Sprott's major holdings. They own the southern part of the urban windfall district where Osisko Mining put out a resource estimate earlier this year that really had people shaking their heads saying, you spent $140 million to double the resource to 3 million or so ounces and you dropped the grade somewhat. If that's the price of ounce creation, your sector is in serious trouble. Bonterra has yet to produce an updated resource for its Gladiator zone. They just did a deal with Bowfield Resources, which is another one of these companies that's now controlled by Osisko Mining, another orphan company where the founder was kicked out early last year. Metanor, the founders were also kicked out, and then a wonderful 10-for-1 rollback was done. And admittedly, it had an awful lot of stock out and a better structure afterwards. This deal involves Bonterra issuing about 1.6 shares for each Metanor share, which valued the company at about 73 cents a share. And, of course, with this market continuing to deteriorate in general, with that Bonterra at 40 cents, this financing or this acquisition merger is now a 64-cent deal. And by the time it's done, it's probably going to be lower, and that already seems to be evident in the price of Metanor, which is below the fair value of the merger terms. It is, however, pretty much a good outcome for both companies. Bonterra gets infrastructure right in its backyard. It gets additional resources, which will beef up whatever it hopes to report in the latter part of the year. They also have another project where they are doing exploration drilling in Ontario that could turn out to be interesting. So I would say, given that the founders were already kicked out of Metanor a year and a half ago, it is an Eric Sprott-run company. It's putting eggs in two different baskets into one basket with synergies present. It's being done on terms that are good for Metanor, given its financial situation not being particularly great. And Bonterra, which just raised another round of capital this year, it'll be in a very well-financed position, and it ultimately sets up, if Osisko Mining really does decide that it wants to develop this camp and not just go through the motions, Osisko Mining eventually would absorb Bonterra. There'll probably be some mercy killing of Beaufield along the way to roll that all up into one entity, and then the entire Windfall camp will be controlled by one entity. Right now, Bonterra has taken on the role of consolidating these loose ends. I suspect at the end of the day, they'll probably also absorb Beaufield, and then it comes down to a negotiation between Osisko Mining and Bonterra, what the terms are to roll it all into one big entity.
We'll have John Kaiser's closing thoughts right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with John Kaiser. John, Eric Sprott's a major backer of Pacton Gold, a junior once run by Bonterra's Nav Dollywall. What is the state of the Pilbara conglomerate gold play these days?
Well, the Pilbara play seems to be losing substantial momentum. Now, that has not stopped Pacton Gold. It made waves earlier this year when it acquired either 80% or 100% interests in major land positions in the northeastern part of the Pilbara, in the eastern Marble Bar area of the Pilbara, basically doing deals with Australian companies which had been quick out the gate in acquiring land on the peripheries of the play once Novo finished its staking spree, or happened to own these claims for reasons that had nothing to do with the conglomerate focus that the Pilbara is now all about. In the latest deal that Pacton did, it's quite an expensive deal. It's for the Bellarmine South Broad Dome project, which is at the southern end of the Pilbara. It's a portion of the underlying Pilbara that bulged up, and so you have the Mount Roe basalt exposed at the edges. The focus in that area has historically been more sheer vein type hosted traditional gold, hosted in bedrock rather than conglomerate. But this property has evidence of gold nuggets spilling out from the edges of the Mount Roe basalt. But the terms are quite steep, and Sprott Capital Partners was the finder for this deal. So I'm not quite sure how Sprott Capital fits in with the world of Eric Sprott and the Sprott Global world of Rick Rule. But Sprott Capital has been playing an important role in teeing up this deal. And this deal requires issue of 11 million shares or 10 million shares and the payment of a couple $2 million in stages. Now, the interesting thing about the Pilbara is as all this information about the historical occurrences of conglomerate gold is collected, and as companies have gone through their own records and looked at their own properties, it is clearly evident that anywhere on the Pilbara where the Mount Roe is visible, basically Mount Roe is the sort of first major formation that sits on the considerably older 3 billion-year-old basement, there are these gold nuggets whose origin is unexplained. And again, this is what fascinated Quentin Henney last year when he started hearing about the conglomerate gold in bedrock, in the conglomerate bedrock, in the Karathite region, quite a long ways from Allegheny and Marble Bar area properties, the Beaten Creek area. But the bad news is that the task of figuring out how do you measure, how do you quantify the grade of this nugget gold in these conglomerate beds, that seems to be a question whose answer keeps slipping into the distant future. A week or so ago, Novo put out an update, and there were no more additional results. It's a month after they gave us the results from basically one pit, 2 levels in one pit in what they call the lower cannonball conglomerate. In the latest news release, they've shifted their focus to the upper cannonball and concluded that this is the unit that actually exists on the Artemis Purdy's reward ground to the northeast of the Comet well, where they have been focused this year. The length of time it is taking to get multiple data points for these conglomerate gold-bearing targets, it's starting to become very disturbing because single data points don't do the trick. We need a grid of data points. We need some sort of logic as to why the horizon, how the horizon where you found the nuggets connects to the others. And this may be why they are shifting their focus from the lower cannonball to the upper cannonball conglomerate unit, because in the middle of it is a tuff horizon, and tuff is basically volcanic ash from some nearby volcanic eruption that rained down for a period. It won't have really much gold in it at all, because it would have happened fairly quickly and then piled up. The gold itself has been alluvially transported. It did not grow in situ. And so this marker unit seems to be extensive, and they are now going to chase this as a way of determining that they are in the upper cannonball conglomerate. And the fact that we now have an upper cannonball and a lower cannonball, and the lower cannonball is obviously older than the upper cannonball, and the upper cannonball exists on the Purdy's reward ground, where they found that the nuggets exist in the lower sort of 40, 50 centimeters just above the basement contact. They may finally have a targeting strategy where if they can trace this tuff horizon and then go after the conglomerate unit that sits below it and target that for their bulk sample pitting, they may be able to put together a grid of bulk sample pit locations whose results start to put together a coherent picture for, what is the average grade potential for these conglomerate-bearing horizons. Unfortunately, the waiting game just keeps stretched out farther and farther. And companies like Pacton, their problem is, yes, they're accumulating all this land, but they don't have the $60-70 million in the treasury that Novo does, where they can just keep beavering away. They will have to raise money to pursue methods, and right now, they're really all in a waiting game. Novo, please show us how to do this properly. The slowness with which Novo is showing us the method by which you measure this, that is putting a pall on the whole Pilbara gold conglomerate play.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.